Okay, if you're buying a home or, studying for that big NMLS exam, you've seen the mountain of paperwork. It's a lot. But today we're going to zero in on the two documents that truly matter most, the loan estimate and the closing disclosure. Let's break them down.
You ever get that wave of anxiety just looking at a closing packet? Yeah, you're not alone. It can seriously feel like you're signing your life away on documents you barely get. But here's the good news. The whole system was actually redesigned around two key forms, and they're meant to make things crystal clear. If you can understand these two, you really understand your loan. So first up, we've got the loan estimate, or what everyone calls the LE. The absolute best way to think about this is like it's your loan's roadmap. Before you even agree to take the trip, the lender has to give you this document. It's kind of like their initial promise, sketching out the whole route and estimating all the costs you can expect. So the most important word here is estimate. The loan estimate is a standardized 3-page form that shows you your estimated interest rate, monthly payment, and all those closing costs. And a really key fact to know for the exam takers out there, the LE actually replaced two older forms, the good faith estimate and the first truth in lending disclosure. Now, timing is just about everything in the mortgage world. Lenders can't just send this out whenever they get around to it. The rule is super strict. They have to deliver the loan estimate to you within 3 business days of getting your completed application. But what does completed actually mean?
Well, an application isn't officially complete until the lender has 6 specific pieces of info. And there's a really helpful way to remember this, using the acronym ALIENS. It stands for address of the property, the loan amount you want, your income, an estimated property value, your name, and finally, your social security number. Once they have all 6 of those, that 3-day clock starts ticking.
Okay, so if the loan estimate is the roadmap they give you at the start of the trip, then the closing disclosure, or the CD, is like the final summary of your destination. This is the document that basically says, okay, we've arrived, here are the final, actual costs of your entire journey.
This document? It's the final word. The closing disclosure is a 5-page form that itemizes all the final numbers for your loan, no more estimates. It's designed specifically so you can see all the hard figures before you're sitting at the closing table under pressure. And again, for the test takers, it's really important to know that the CD replaced the old HUD-1 settlement statement and the final TIL disclosure.
And just like the loan estimate, the closing disclosure has its own magic number, and that number is 3. But this isn't just a guideline, it's a federally mandated waiting period. The law says you absolutely must receive the closing disclosure at least 3 business days before you are scheduled to close. It's your built-in time to review everything, no pressure.
But wait a second, what exactly counts as a business day? This is a classic exam trick question, so listen up. For this specific 3-day waiting period, a business day is defined as all calendar days except for Sundays and federal holidays. And yes, that means Saturday totally counts. So if you get your CD on a Thursday, you could technically close as early as Monday. Okay, so picture this. You've got your closing disclosure. You've checked it over, and you're just 3 days from closing. Everything looks perfect. But what happens if something changes at the very last minute? Does the whole process have to start over?
This is the one question that causes so much stress for pretty much everyone involved. Home buyers, loan officers, you name it. You find a tiny typo or a fee gets adjusted by a couple of dollars. Does that mean your closing just got delayed for another 3 days? Well, the answer, thankfully, is usually no.
You really want to pay close attention here because this is so crucial. Only 3, and I mean only 3 specific changes will trigger a brand new 3-day waiting period. Number 1. The APR, which is the total cost of your loan, goes up by more than 1/8%. Number 2, the loan product itself actually changes, like from a fixed rate to an adjustable rate. And number 3, a prepayment penalty is added out of nowhere. Just those 3. That's it.
So what about all the other little stuff? A small change in your homeowner's insurance premium, a slight adjustment to the recording fees, some minor clerical error? None of that is going to restart the clock. The lender will just issue a revised closing disclosure, and you can review and sign that one right there at the closing table. No new waiting period required.
All right, we've covered the basics of both documents. So now, let's put them side by side in a little showdown to really hammer home the differences. This is where it all comes together.
This table just makes it crystal clear, right? For purpose, just think estimate versus final. For timing, think after you apply for the LE and before you close for the CD. And here's a big one to remember, record keeping. Lenders have to keep the LE for 3 years, but the more final CD, they have to keep for 5. And as we covered, they each replace different sets of older forms. Pretty simple when you see it like this, huh?
We're almost done, but before we wrap up, let's do a quick rapid-fire round of the absolute must-know nuggets of info. If you are taking the NMLS exam, these are the points you just cannot afford to forget.
Let's just pull this one out on its own because it's a super frequent exam question. Lenders have to keep a copy of the closing disclosure for 5 years after consummation, which is just the official term for when the loan closes. The magic number here is 5. Burn that into your memory. 5 years.
And let's hammer this home one last time. The only things that reset your 3-day clock are a big jump in the APR, adding a new prepayment penalty, or switching the whole loan product. All those minor fee changes, they don't count. That's it. And here it is, the ultimate exam trick. The phrasing on these two is incredibly similar, but the keywords tell you everything you need to know. If you see a question that says a document is delivered within 3 business days of application, they are talking about the loan estimate. If it says 3 business days before closing, it has to be the closing disclosure. Don't let them trip you up on that one. So there you have it. The loan estimate is your map, and the closing disclosure is your final destination. When you understand the purpose, the timing, and the rules for both, you're not just getting prepared for an exam, you're getting empowered to navigate one of the biggest financial decisions of your life with total confidence.